And this was during Black Lives Matters riots and everything, so nobody would insure it. And again, I said, as long as I can talk to Reverend Al, I'll give him a quote. And I want to know that if some bullshit lawsuit comes in, that we're going to be able to fight it together.
It's time! Work, play, evolve!
I want to connect the listeners to the best of the best. Rick Lindsay, welcome to the Evolve Broker podcast.
Yeah, I'm happy to be here.
Rick, you grew up in Utah. You were a hockey star. And from what I hear, you trained with the 1980 USA Miracle on Ice hockey team. Tell me a little bit about your hockey career and your time training with the USA team.
Well, I mean, my dad was into sports. And so as kids, me and my brothers, we played football, soccer, baseball, never got into hockey. Started playing hockey when I was 12 because of a neighbor friend. And then I was lucky enough to get invited to the Olympic training tryouts in Squaw Valley. Lived there for 90 days. And about halfway through, I realized I wasn't going to be a professional hockey player. And so when I got cut, I went right to work in my dad's MGA.
Did you ever get to know Jim Craig while you were training?
Well, I played with him. There were a number of goalies there. I knew him. I knew Mark Johnson. His dad was Bob Johnson, coach of the Wisconsin Badgers. And him and Art Berglund ran a hockey school in Aspen, Colorado, and Sun Valley, Idaho every year that I attended for many years. And that's how I got invited to try out.
This is totally random, but do you know John Hahn of Epic Brokers or Galway Holdings?
I don't.
Okay. So he was the CEO of Epic, so the founder and CEO of Epic Brokers out in the Bay Area, which had about 3,000 employees. And now he's the chairman of their holding company, Galway Holdings. The reason I bring this up is because I recorded a podcast with him a couple of months ago. And in the podcast, he was wearing a USA hockey hat that was signed by Jim Craig. And it was the 40-year anniversary of the Miracle on Ice. So really small world.
Makes me feel old. 40 years ago.
So when you were growing up playing sports in Utah, did you know that as an adult you wanted to be an entrepreneur?
No. I mean, again, I wanted to be a professional sports person. First it was football, then it was hockey. And, I really didn't focus on school, didn't get good grades, barely graduated from high school. I had worked with my dad probably since I was 12, doing mailers and just office work, started typing policies as the MGA. So my mom always says that I said I wanted to be an insurance guy, but I tell her I don't believe that. I would have preferred to be a hockey player. But, now that things have worked out, obviously, hockey careers don't last that long unless you're, real lucky. Which obviously I wasn't lucky or that good of an athlete. But, I think my dad running the MGA, starting on the MGA side of stuff, gave me a unique view, dealing with clients directly. I started insuring helicopter ski guides and rafting companies and horseback riding, so it was recreational related. And at that point, they needed help like truckers need help now. Right. They were under attack by the law firms. And as an MGA, then I became an agent doing the outdoor recreational stuff. It, kind of laid the track to see that what we really do is manage litigation. You got to underwrite, but if you underwrite the best in the world and you turn your claims over to people who have a different strategy or approach, you're kind of spinning your wheels. So that's when I knew I needed to get an insurance company. And it took me about 15 years to, get in a position where I actually ran an insurance company. It was a syndicate on the Illinois Insurance Exchange, which at that point, the exchange had hit its peak and most of the syndicates were going broke from storms. and I took over Prime. It had $2 million in surplus left, and basically the exchange was falling apart. So I tried to save the exchange for a while because I do believe in the Lloyd's subscription model. I think it's, a unique way that used to work. As the exchange evolved, the company did their own thing. They didn't share risk at all. They had separate reinsurance. And I think that was ultimately kind of the reason that it wasn't successful, is because, they didn't have other underwriters agreeing with the strategy and the approach. So the exchange failed, and we formed Prime Insurance Company and merged the syndicate into the company. And now Prime Insurance Company is A-rated in all 50 states. I can issue up to $10 million limits, which, my bigger competitors have shrunk their limits. Most people are issuing 1 or 2 or 5. Not many can issue 10. And I do that because I have a proven track record. I have good reinsurance with Berkshire Hathaway and RLI and AXA, who I've done business with for many, many years. And, if I didn't make money, I wouldn't have that reinsurance support. I wouldn't have no exclusions in my reinsurance, which, again, give us a unique ability to be a better partner because we don't have to worry about exclusions and stuff we can't write.
Rick, it's really interesting. You and I have walked down similar paths in the insurance industry because I started working for my dad's small agency in the Bay Area, doing administrative things, prospecting, direct billing, et cetera. And then instead of getting into the retail brokerage world, I actually got into the MGA world. And ironically, our cyber product is backed by Lloyd's of London. So very familiar with, how Lloyd's works. And it was really interesting reading your background about the way that you approach risk and the way that you utilize quota share a lot of times to write risk effectively. I also know that you grew Prime Insurance from 7 employees to over 200 employees. Is there any major milestones along the way that you think were huge learning lessons from a business entrepreneur standpoint?
Well, I think that, as you're evolving a company, obviously I was C-rated, then I was B-rated, then B++. And, I thought that if I got the A rating, that would kind of open the doors to production. And that was probably the most surprising thing. And again, because you have an A rating means you can look at business that you otherwise wouldn't have. But, we didn't have the growth at that point that I thought we would have. We could have, but we would have had to compete with aggressive pricing, which, is one of the problems with the insurance business is just issuing paper. You really don't know what your costs are. And so, most people hire actuaries to tell them how to, be aggressive and, capture a certain part of the market. And, at that point, I just decided I wasn't going to compete with stupid pricing and we would wait. And I think that's, you can't always grow. That's why I'm not excited to go public, is because then you have to answer, Cheryl, why aren't you growing? Why aren't you growing? Well, sometimes the best thing to do is not grow. Sometimes the best account you write is the one you lose or you don't get. So, I think that patience is something that obviously in the stock world, the banking world, the insurance world, growth, grow, be the biggest. And, I think that's kind of where people lose sight of making happy customers. As the insurance market cycles all the time, we make unhappy customers. I don't believe people like lawyers, right? Why do they go to lawyers? Because they're mad at us. Because they don't think we took their money and then we didn't do our job. So then they go get a lawyer. Most people don't like lawyers. They don't want to go there. So, again, be patient, slow down. If you take somebody's money and you were too low, too cheap, don't throw them under the bus. Do your job and make a happy customer admit you were too cheap. But we tend to blame the insured in our industry for having claims. And really, that's why we take their money, is because shit happens. People have claims. And so that's where, I try and teach my claims people that, let's not create unhappy customers, right? Let's, on the claims end, let's be proactive. Let's do our job. And, I think there's a huge opportunity there. Just like in any business, you run a water park, you're going to have injuries happen. And you can either shove them off and ignore them, and parents and the community get a negative, attitude about you that you run this shitty water park, or you can have those same injuries and you can take care of people. And the mom might say, yeah, you got hurt there, but guess what? They were really nice people. They took care of us. Doesn't mean you're going to pay them a pile of money, but it means you care about your business and your customers. And that's whether you're running a water park or an insurance company. I think that's just good fundamentals.
Prime is known for writing high-risk liability insurance. And one of the wildest stories I heard is that you were able to insure the Steve Bartman blow up of the ball associated with the Steve Bartman incident. For all the non-Cubs fans out there that are not familiar with the Steve Bartman incident, can you talk about what happened in the Steve Bartman play, and then talk about how you were able to ensure the blow up of the ball?
Yeah, so obviously, we were a much smaller company in Chicago, and I had been to Mizero a number of times, which is a big broker there. They weren't interested in doing business with us. I think that was the first opportunity where they called us. And as we still do today, I said, I want to talk to the pyrotechnician. I want to talk to the guy who's actually exploding the ball and know what the real risks are. I want to talk to him. So we got on the phone, and he actually explained to me that, they had done this many times, that it was no big deal. And, told me some stuff that he'd done, how he tested it, didn't understand why he couldn't get insurance. And I told him that, I felt very comfortable with it, and we gave him a price. He bought it. I watched it on the internet because it wasn't on TV and I couldn't be there live. But
where did they blow it up?
Went off. What's that?
Where did they blow it up?
They did it in the parking lot right there next to Harry Carey's in downtown Chicago.
Okay.
And that's really why they needed the permit. And so anyway, I almost felt a little bit bad because it wasn't an explosion. I expected this glass box that the ball was sitting in to kind of jump off the table, or, percussion out and fill with smoke. And it was really like a sparkler. And I was like, so that's it? That's the explosion? And so, risk is relative, right? When people think, oh, Rick does high risk or Prime does high risk. Well, is helicopter skiing high risk compared to a truck or a barbershop? I've had low risk insured, apartment buildings have trips downstairs where people are brain damaged for the rest of their life. So, risk isn't so much a class of business as it is the class of person that you're dealing with. I hear that about towing and repo. Oh, you can't make money on that. And it's a standard exclusion in reinsurance. And why is that? Well, because towing and repo is hard. Well, it's hard, but that's kind of our job. And you are going to have claims. And if you insure good classes of people, you're going to have less problems. Doesn't mean you can't insure the higher risk people in that business. It means you got to collect a lot more money from them. And most of the time, actuaries and insurance companies don't give you the flexibility to be able to go higher or lower. They're going like, no, stay within the box. You can credit 10 or surcharge 25, but outside of that, it's a loser. And I've never understood that rule. So I also believe over time, as you become comfortable with an insured and you bank money, that relationship changes, right? You should be able to convince him, if he has a big claim that anybody else would pay $1 million on and we get rid of it for 40, like we do all the time. Those are things that actually we're giving our insured performance that allows them to go get a cheaper quote from another market. Because he doesn't have the $1 million claim now, he's got a $40,000 claim. And so that's our biggest challenge, right? And that's what keeps us honest. And when people say, well, I got a cheaper quote, I'm like, yeah, well, cheaper always isn't cheaper. Because if you go with them and they pay $1 million on a claim we would have paid 40 on, you've just cost yourself more money in the long run. You're pushing the ball the wrong way. You're pushing it uphill instead of downhill.
Absolutely. Did insuring the Steve Bartman ball blow up cause anyone else to come to you to ask you to insure another super risky event or situation like that?
No, and I would say, you know, it's not about us, right? It wasn't that we were a great marketer. It wasn't that. It was because no one else, it was the competition ran away from it, right? So I always talk about it like, you know, when those guys are running out of the burning building because they think, you know, this is too high a risk, we can't ride it. And today I still wonder why they thought that was high risk, right? I mean, there's other things that are a lot higher risk than a sparkler in a glass box. There's Burning Man. There's all kinds of stuff that's placed easy. But for some reason, you know, that was the issue. More interestingly, I think, you know, this year we actually insured Reverend Al Sharpton's Martin Luther King anniversary march from Washington Monument to Lincoln Monument or whatever it was. And, you know, they basically used to get that for $600. And this was during Black Lives Matters riots and everything, so nobody would insure it. And again, I said, you know, as long as I can talk to Reverend Al, I'll give him a quote. And I want to know that if some bullshit lawsuit comes in, that we're going to be able to fight it together, that we're going to use the system to our advantage. We're not going to let it abuse us, because no matter what I think about Reverend Al or other people politically, you know, I know he doesn't want to be involved in a frivolous lawsuit. I know that there might be people who attack him or try and cause him trouble. And all I need to know is we're going to be able to, you know, manage litigation successfully. And I tell everybody, the wild card is the insured, right? The insured is the other decision maker, and they're the ones that we have to give comfort to. And I'm always surprised when an insured, you know, calls me with their lawyer and they're telling me to settle some, you know, frivolous lawsuit. And I say, so, you know, what does this lawyer do? What kind of lawyer is he? And in most cases, he's never litigated anything. He's a corporate business lawyer. And all lawyers, when the, you know, bad faith demand comes from the other side, which is going to come, every lawyer on the planet is going to tell the insured the same thing. Write a letter, tell the insurance company to settle. So that's what I tell them in advance. I say, look, you know, real simple. If it's a bullshit lawsuit, I don't want you writing me that letter. If you're going to tell me, you know, tell me now. Tell me that you don't want to fight frivolous litigation, and I got to price it differently. So, you know, that's where I think underwriting and claims have to be connected. And, you know, with Lloyd's of London, I used to issue their paper. I don't anymore, but when they would come do their audits, they would say, you know, you have to have a Chinese wall between underwriting and claims. And, you know, they can't relate. And, you know, I understand when you're giving your pen away, you want a separate TPA and you don't want them managing each other. But you're really losing a lot of your advantage if you combine the two. And I think that's why Prime's successful. We don't underwrite without taking into account how we're going to manage the claims.
Rick, your profitability speaks for itself. The number that your team gave me is that your combined ratio is 72%, which is about 30 points better than the industry average. So there's no doubt that you're doing something correctly and successfully. What is the Prime Insurance culture like?
Well, you know, right now I think that I'm lucky because I have almost 250 employees now. We just completed our annual reviews, and what surprised me most was the length of time people have been working for me. You know, I got some that are 30, 35 years and, you know, 28, 22. I would say the average has got to be above 8 to 12 years. So, you know, wow. That culture has been growing and they're all believers, right? If our loss ratio was 130, they would think Rick's nuts, like everybody used to think when I was trying to raise money. They would say, you can't do that. You can't do that. People like to tell you can't do stuff. And ever since I got cut from the Olympic hockey team, when people tell me that, I think I'm going to prove you wrong. And in business, it's a lot easier than it is in athletics, because in athletics, you either have the natural talents and, you can hone them to a certain degree, but there's people that, just don't have the same level of physical skills in athletics. In business, I think if you work hard and, stay focused, you can be successful. And, a lot of my high school friends, want to act like, I'm, the only reason I'm successful is because I've done the same thing since I was 17 years old. I haven't changed careers 5 times. And, a lot of people who come to me, they come with a lot of college debt. I say, look, you work here for 4 years. You're going to learn as much or more than you did in college. And I'm paying you. And now you can go make as much money as you want. So, I think that, again, not having gone to college, I wish I would have, because I think it put up a lot of roadblocks to me. You can't even get a job interview if you don't have a college degree in most cases. Obviously, I break that rule. I give everybody an opportunity because I know there's a lot of smart people who didn't go to college.
Is there something specific about the Prime Insurance culture that you think has caused people to stick around for so long? Because that longevity for the employees being there is really impressive.
Well, I think it's just, a lot of my insureds have been around for 35 years too. Exxon Mountain Guides, Rainier Mountaineering. And I think that is, like everything else, kids, employees, friends, family, if you recognize people and, incentivize them. So if you're a better risk, you should get a better rate. If you're a risk that, is trying hard, but you're not as good, you'll claim all day, I'm the best risk on the planet. And I always look at them and say, look, I can show you other guys that are better than you, right? You're not bad, but you're not the best. That's why you have, one more claim for every 10 that the other guy has. And it is just math at the end of the day. So, I appreciate my best employees and I treat them like my best. If you have 10 employees and you treat them all the same, I guess to summarize it, what I say a lot is I hate the term customer is king, right? Mm-hmm. You know what? My best customers are definitely my kings. Same with my best employees. But if you're my worst employee or my worst customer, I'm not treating you like a king. I'm going to let you know that, I'm happy to treat you like a king, but you need to treat me that way too. And then, your rate gets better, your pay gets better. Mm-hmm. So, you need to know the difference between your best and your worst, and you need to just, treat them accordingly, and they need to know the game too. Once you get that set, then the good people float to the top. But if you treat everybody the same, the good people sit there and think, he doesn't even know I'm the best employee he has.
So you're treating it like a meritocracy, and I think it sounds like a lot of people have bought into the unique Prime Insurance philosophy around underwriting and claims and the way that you treat clients, if I'm understanding that correctly.
Yeah, I think underwriters, in the beginning didn't want to talk to insureds. They prefer to talk to the agent broker. I think now most underwriters at Prime realize that talking to the insured is critical and key. It's laying that track so that when the train goes off the tracks, everybody knows how we get it back on the track. And then same with the claims people. The claims people have to answer to the insured, right? It's just like when a truck driver has an accident, I don't want to crucify them. I don't want to cancel them. Now we jump into claims mode and we do our job. And it's the same on underwriting. You make the most of the opportunity and you do your job. You don't think, in claims, I always got the attitude before that the claims guy thought we were stupid for writing river runners, right? This is high risk. You shouldn't do it. And it's like, I want somebody that has a fresh attitude, not somebody who starts off on the other guy's side. Mm-hmm. Let's believe our own insured. Let's have a proactive approach. Now, if you screw up, I always say, within 30 days, we need to know the facts of each case, and we need to know, the strategy. We all need to agree. And I remember back, when I was a producer, you'd be 2 years in and you'd still be talking to the insured and the lawyers about whose story is true, right? Did the mud flap come flying off of the truck, or did the motorcycle hit the truck and rip the mud flap off? I can figure that out within 30 days, right? And that's what you need to do. And your insured can figure that out. And if you're wrong, you go pay the claim. That's the big mistake I think most insurers make is, the lawyers, when you have a claim and you're at fault, they want you to pay as soon as possible. And then there's a line you cross where if you offer them the limit, they're not going to take it anymore. They're going to say you're too late. You committed bad faith. So, time is our enemy. And as we meet with every insured, we tell them, if you have a minor claim and you can't report it to your insurance company, you're with the wrong damn insurance company. It's like buying a car and not driving it. And, it's like, well, why did you buy the car? Well, I got a good parking spot. I don't want to lose my parking spot. Like, well, you don't need the car or the parking spot. You're wasting money.
Do you work with both retailers and wholesalers?
Yes, we do.
Okay. And brokers in any state can work with Prime?
Yep. Any insurance producer, retailer, wholesaler, we want the best to rise to the top. We don't give exclusive, just like me. Nobody gives me a reinsurance exclusive, but they give me the best reinsurance because I make myself exclusive. So that's what producers should do. If they've got the relationships and the knowledge, they need a good insurance company, and it's a perfect marriage between all of us, whether you're a retailer or a wholesaler. Our model also, everybody says, well, what prevents you, wholesalers are worried that retailers are going to come to me direct and I'm going to cut them out. Well, when that happens, historically, why does that happen? Like K&K did it to me when I was a retailer, right? They cut me out and the wholesaler made more money and K&K made more money. Well, I protect wholesalers because I pay retailers less commission. So a wholesaler can pay the retailer more than I can. So when a retailer calls me up and says, hey, I want to come direct, they're going to have a reduction in their commission in half. You know what they say? Oh, forget it. I'll go back to my wholesaler. So I'm not into the old ways of, gypping people and having false relationships. The insured's the insured. I'm the insurance company. I'm happy to have anybody involved that adds value. And my model supports that by not cutting people out, by rewarding bad behavior.
Is it true that you make yourself available to every single employee and every single insured 24/7? Like if I'm a client, I can give you a call in the middle of the night. I can give you a ring if I'm dealing with some sort of claim scenario. Is that true?
Yeah. Yeah. I mean, again, I get more calls on, them needing a certificate to get business and, claims calls I get occasionally. But yeah, I give my personal direct dial number out to every insured. It's on the internet. If you go and look, it's the president's hotline. And, I've been doing that for many years. And I would tell you that my phone used to ring more than it does now. So I think,
that's impressive.
Trying to, stay out of the, if you just open yourself up, it makes everybody more honest and it makes everything flow a lot better. And, it allows you to correct problems instantaneously. So I tell every insured, my claims guys have to talk to you before they pay a claim. And if they're telling you a bumper's worth 15 grand and it's only worth 5, call me up and let me help you fix the problem. Don't complain about it at renewal because you have too large of claims, although I want them to do that too. But I can't do anything about it after you let the baby, out of the womb. The baby's there now. So we can discuss that at your renewal. And in many cases, if, we did screw up, I'll eliminate that from the renewal calculation. Our goal is to give people credits the second and third year and get to a rate that we know we can sustain for the next 30 years, no matter what happens. Our goal isn't to come in hot and cancel people. We want to prove ourselves and have people prove themselves.
Our business is built on relationships, and Prime offers brokers some of the coolest experiences that I've heard of in the industry to build those relationships. And I'm talking everything from wake surfing to spear fishing to hot air ballooning to helicopter rides. And frankly, there's so many. It's like, I think the experiences vary by state, which is super cool. If I'm a producer and I'm working with Prime, or I want to work with Prime, what do I have to do to qualify for one of those experiences?
Well, basically, it's just the desire to do business with us. If you're already doing business with us, that's something that we talk about. If you don't do any business with us, you call us up and you say, hey, this is my company, this is my network, this is what I'd like to do. And, the adventures that we try and do are trying to combine, we used to do 81 conventions a year and sit in the booth and have people walk by. So, that I would say COVID has really, accelerated us into these better meeting venues where we take you to somebody we insure, and they're showing you, and you get to know them because we've insured their helicopter ski business or their snowmobile business or their fishing business. And, we've done it for 30 years. Some of them had big claims that we've gone through it with. So to combine agents, producers, brokers, and other insureds with old insureds, because the event we just did for a Miami group, they brought the big trucking company we insure. So it's not just for producers, right? It's to really have everybody feel like, we're an NBA team and we're ready to go to, the NBA championships at any time. But it does take a team. It takes good producers. We can't write everything. So in many cases, the producers are writing work comp or their property or their owners. And, I look at us as the solution provider that comes in and fills the gaps or the needs at the time, right? So if somebody shows up and will do the auto liability very affordable and aggressively, we let them have it, and we'll do the higher to non-owned auto or the contingent auto that they won't do. So, and it's really more about the other markets and what they think they want. It's not us designing the plan because, there's 900 other insurance companies out there that are devising new strategies and plans all the time. And if you attack, you do that with an actuary and you're doing it with aggressive pricing because you think that's what you want. My experience over 40 years is what most people think they want isn't what they really want. That's why the insurance market cycles.
Mm-hmm. So it sounds like there is not a specific threshold to be able to, build a relationship with Prime or go on one of these experiences. It's almost more the potential for business has to be there. The relationships have to be there with those that are the key stakeholders in the insurance process, correct?
Yeah. I mean, we want to know their level of interest, their level of commitment, what they have. And again, if, some kid like me came to me, 40 years ago and said, hey, I want to write river rafters and helicopter ski guides, I'd want to be the guy that empowers it. And he could go out and screw it up a lot of ways. Hopefully I'd be able to help him make the most of it because of my experience. But, I need good producers. I need good insureds. I need good lawyers, but, I do think that it's something about, relationships is the foundation of this all. And insurance has become more of a commodity, like you go to the grocery store and buy a banana. If the one store closes, you can go find bananas anywhere. But when you go searching for bananas and there are none, then it becomes hard to place or high risk. And, I think that those are kind of mislabels of our business because it's all relative.
Rick, you've grown your business tremendously over the last 20 years. How do you see your business growing in the next 10 years in the 2020s?
Well, I know that, when I was an MGA and we sold that, I became a risk purchasing group manager. We did about 20 million in premium. And I was like, if I had my own A-rated insurance company licensed in all 50 states, I could do 200 million. Well, now we're 270. We'll probably do 300 this year. My own vision is that, the auto market started going hard about 7 years ago, and it doesn't show any signs of letting up. If anything, I think it's picking up momentum because the lawyers are attacking it more. There's big dollars, big lawsuits, big money. So it's, that's nuclear verdicts and social engineering. So, it's not very popular, but I don't see it getting softer anytime soon. I think other lines like professional, D&O, property, are all going to go through this same cycle that auto's gone through. So, I don't have a predetermined number anymore. I think that, our ability should allow us to grow to $500 million to $1 billion over the next 5 to 10 years, as long as the market moves the way I just predicted it will. If capital shows up and people start getting aggressive again and pricing gets too cheap, then we won't get there, right? And I'm not about being the biggest or, I don't have to grow. I'm happy to shrink. I could shrink to zero and save my money. There's no reason for me to write business to lose money. So, I think that my own vision is that the next 5 to 10 years, it's going to be like the banking industry changed in 2008 because of the mortgage crisis. I think the insurance industry with COVID, active shooter, nuclear, all that stuff, it's going to change our business forever. I don't believe the cycles are going to be, as short as they were before. I think they'll be longer. And of course, anybody could show up with $1 billion tomorrow and start writing trucks real cheap, but I'd be shrinking.
I totally agree. All I do is focus on cyber insurance at the current moment. And you mentioned social engineering. We internally refer to it as wire transfer fraud because the acronym is WTF. And that's obviously what everyone would be thinking if they transferred money out. So that's a claim we're seeing all the time. Is only surpassed by ransomware at the current moment. But just the way we see the cyber landscape changing and the market's hardening at the moment. And, as more and more things become connected to the internet, the more exposure is going to be increasing. Is there any specific type of tech that you foresee that will come in and change the way business is done on a day-to-day basis between brokers and underwriters and carriers? I keep stuff simple. So, I have my own software program, my own system that I've built since 1986, and we evolved with. And, most of the reinsurers have come in and seen it. Most of the regulators have. Everything's at our fingertips. And, I could spend all kinds of money on InsurTech, right? Trying to do all kinds of stuff. Mm-hmm. And to me, it's hocus pocus, right? We're not using the stuff we do. Every homeowner and condo, personal lines, if you have a claim, I had 1,200 Katrina claims, and, you basically tell your insured, prove your claim, right? Show us your stuff, right? Give us the receipts. Well, that's bullshit. They can't come up with that stuff. Maybe 1 out of 100,000 is that anal to have kept every receipt for everything they ever bought in their house. But your phone, your iPhone, any insured can now walk around their house and take a video of the contents and the outside, and the insurance company should put that in their file. And that would be the most valuable thing that anybody could ever have in a property file because you have evidence of what was there. But we're trying to create boxes to underwrite it instead of focusing on the claims where the problems are. So, to me, there's, a lot of guys into InsurTech, and we've heard about it for years. And I think money, but that's just my personal opinion. Is there any advice you have for folks in the industry? Maybe they're just starting out, or maybe they're a little deeper into their career. Is there any advice you have that you think you picked up along the way that would be helpful for someone else in the insurance industry?
This is me, as I talk to insureds and producers, is, they'll say who the company is they were with last year or who's offering them coverage this year. And I always ask, what's their expense ratio? and what's their combined ratio. Because, there's all kinds of companies out there offering really cheap rates. But when you look at their loss ratios and their expense ratio, you shouldn't buy from them. It'd be like building a house with a builder who's going broke on the last house he built.
That's where the rubber meets the road. Yep, that's where the rubber meets the road.
Yeah, he needs your money to finish the last house. And then to finish your house, he'll need the next guy. So, I think, again, fundamentals, if an insurance company is spending more than, like Lloyd's, if you're spending over 30 cents to issue your paper, you got a problem. You should be making a car, or you should be making something that's hard to make, not issuing a piece of paper.
Rick, you may be one of the most entertaining follows on Instagram of any insurance CEO that I've encountered. I've had a couple folks call you the Dan Bilzerian of the insurance industry. What is your name on Instagram so people that are listening to this can follow you?
You know what? I don't even know. I think it's Rick Lindsay 74.
Rick Lindsay 74. We will confirm that for you after this, and we'll put it in the show notes. But I just want to put that out there because I love the how active you are and how entertaining the posts are on there.
I appreciate that. Thanks.
Well, Rick, I think I'm ready to wrap up. If you are there any final messages that you want to leave our audience with?
Well, I think insurance is a great business. I think it's grown to be too big a business, and most people think of it in a very complex way. And when I get in heated situations with my insureds, I say, what the best idea is let's all act like we don't have insurance. What would you do? Right? If somebody falls at your skating rink, and if you didn't have insurance, you'd take care of them. It's kind of like hitting somebody's car in the parking lot. You leave a note and they call you and you take care of it. In our business, we try and run away from stuff. And I think that's in many cases because either lawyers of insurance companies have confused us when they take our money, then they want us to divert to them. And, I always say, look, it isn't that hard. Just, when you feed a horse, something's coming out the back end, and a horse is like a business. And if you can't manage the stuff coming out the back end of the horse, your business is going to fail.
Yeah.
And so, with a good insurance company, that's what we do. We deal with the back end of the horse, and it should be a partnership with the front end of the horse, not where we have a bad attitude about, the head of the horse eating stuff it shouldn't eat.
Mm-hmm. Rick, I got to say that might be one of the funniest analogies for the insurance industry that I've ever heard. And I'm with you. I'm with you on it. So,
okay, well, I appreciate this. It was fun.
I really appreciate you taking the time. I'm excited for people to listen to this and get to know you a little bit better. And I also look forward to staying in touch.
You bet. We'll
all right, Rick.
Hopefully do some business. Thanks.
I'll talk to you soon.